I'm Poon from GoldSilver Central, and for this webinar, we will cover the one thing that every investor should know before placing a trade. If you're using a mobile to view this webinar, remember you can shift my face to the bottom right so that you can see all the content of the sharing I'll be later on. This webinar will take for around 45 minutes. And if you have any questions along the way, please raise it up at the Q&A chat. At the end of the session, I'll take a look and answer you right away. Okay, this is just a disclaimer. So when I distribute this slides to you at the end, basically it just says that you can't use it for it's just for your information. You can't use it for any other users. Some background about GoldSilver Central. We have been in the precious metals market for 10 years. We are a regulated precious stones and precious metals dealer. So you can see that our team has actually seen and experienced a lot throughout these 10 years, and we are well versed when it comes to investment, especially on precious metals. We are also honored to be a member of SBMA and also authorized distributors of the following entities. In fact, we will be holding another webinar with Perth Mint next week on 14th October, 12:30 noon. The link is in the chat right now. So register for it to learn more about precious metals management and also a bit on offshoring. Okay, for the content. For those who attended my previous webinar, bear with me for a short while. I will quickly run through the setting up of GSC Live account as it's important in the following section, where I will do live demonstration of different kind of trades. And then finally, right, I will touch on the highlight of this webinar, where we will learn how to determine price trends and use it to your advantage. Okay, for mobile users, whether you're using Android or Apple, you can just go to the Google Play or the App Store, and then you can search for Meta Trader 4 here and look for the icon. For Windows user, you're using a computer, right? You can there's a link in the chat right now for you to click on it, and you would do the download for the installation file right away. Okay, you saw that? Okay, so while we are doing the download, right, I'm going to do a quick run through about what is GSC Live. GSC Live is a digital platform for precious metals accumulation. So it comes with highly customizable features where you can tailor to fit what you want. And then it offers pool allocated mini contracts whereby physical premiums are excluded. Hence, naturally, it leads to narrow spreads, and hence short-term trading it becomes possible. So all your GSC Live holdings are physically deliverable. You can change it to, you can convert it to physical bullion based on our website inventory. And lastly, you can buy and sell anytime, anywhere. Okay, so has your download for GSC Live be completed, the MetaTrader 4? If it's not and you need some time, right, you can raise hand so that I can pause and let you finish the download. Okay, give me somebody raise hand, wait a while. I'll give you 20 more seconds, okay? Okay, I think all of you are still downloading. Let's wait for a while. Okay, let's move on. So now we are gonna do a demo account for GSC Live. Okay, after you download, right, click on the app, and then you launch the MetaTrader 4. Okay, on the bottom right, these are all the tabs. You click on bottom right is this settings. You click on that, and then you choose new account right over here. Yes. So after you do that, open a demo account. Completed, you search, there's a search bar, search for GoldSilver Central. and then you select the GoldSilver Central demo. So fill in the required fields, your name, your phone number, your email, and then for the account type, it depends on what currency you like. You can choose it in USD or SGD. And then the deposit, you can put any amount you like, from 100K to 500K. So for this, we're going to select 500K. Okay. And once you press on register on the top right, you're done. The demo account is already set up and you can start to get started right away. Okay, let's talk about GSC Live interface. On the top left, right, you can edit your interface. You can rearrange the contracts according to how you want it. And you also can remove contracts that you don't want, you don't trade on. You can remove them so that you don't have to see them. On the top right is the plus icon, right? You can actually add available contracts to your account. Okay, so for the contract wise, you can see 0.1 ounce, 5 ounce, those is the weight. And then for AU, AG, PT, AU stands for gold, AG stands for silver, PT stands for platinum. For the pricing wise, on the left side, that's the bid price. So that's the price you sell. And on the right side, that's the ask price, the price you buy. Okay. Okay. I know this part, there's a lot of information, but it's actually just for your reference, because right now I'm going to do a demonstration of each different kind, how to execute different kind of trades. So let's get right to it. Okay, can you see my screen? Please help me raise your hand if you can see my screen. Okay, thank you. So I'm going to click on MetaTrader 4. Okay, for now, we're going to do the trade right away. I'm going to select 0.1 ounce AU US, that means gold in US, 0.1 ounce. So once I click on it, there's an option bar. The option bar will come up. I press the first option, trade. I'll be brought to this, this screen. So when I click on market execution, right, it shows me the different kind of trades I can do. So right now we're going to do market execution right away. That means buying at current prices. So following this, right, on the bottom one, there's plus 0.01, plus 0.1. That is actually the quantity. How many, what's the quantity of contracts you want to hit? Okay, for stop loss, right, it's a price level you set to close the trade to minimize your losses. So for example, now prices is at 175. The maximum I can lose from this trade, right? I'm going to set it at 165. I only can lose $10. For take profit, right, it's a price level to close the trade to realize your profit. So if I buy it at 175.9, right, I want to earn around $10. So I select 186. So when I press buy by market, you see buy by market, right? The trade is confirmed. And you can see the trade in under your tradings tab. That's your trade. So on the right side, you see the negative 0.36. That's the profit or loss right now. Okay, next we're gonna talk about buy limit. But before that, I have a question for you all. The previous low for this year was around US dollars 1680. So if prices drop to that level again, will you want to buy gold at that price? Let's wait for the poll to end. Okay, I think most of you selected definitely it's still you will buy gold at 1680. Okay, and the result is out. Yes, most of you selected to buy gold at 1680. So you all know what to do, right? We're going to do a buy limit. For those who are not sure, you don't know what is a good price to enter, don't worry. At the end of this webinar, right, we will be talking about how you can actually check for value prices, and you can decide what is a good price to enter. Okay, so how to do a buy limit? So again, we're going to use 0.1 ounce AUUS. Okay, same thing, you press on trade. At the market execution part, you click on that, a drop down will come down. You select buy limit. Buy limit is when you want to buy at a price that's lower than current pricing. So you set the price that you're willing to pay for a contract. So we talk about 1680, right? So it's 168. And then when we press on place, the buy limit is completed. You can see your pending orders. You set one contract of 0.1 ounce at 168, which is 1680 per ounce. And on the right, that's the current price. This is 1757. So when prices go down to 168, GSC Live will auto trigger the pending order, and it will hit the market right away. Again, for sell limit, it's the opposite of buy limit. You want to sell at a price that's higher than current pricing. So for example, now it's 1757, right? You want to sell at 176. So when you press place, that's the sell limit will go to your pending orders too. Okay. So for buy stop is is where you set a buying price that's higher than current pricing. Why? Example, if prices are moving sideways and you don't really know which direction it's heading to, but you wouldn't want to miss out if prices take off, right? So that's why you set a buy stop so that you won't miss out. So for example, now it's 1757. I'm going to set a buy stop at 178. So when I press on place, the buy stop is confirmed. And you can see 0.1 ounce AUUS buy stop 178. And the current price is 175.8. Okay, lastly, which is your sell stop. Sell stop, you set a selling price that's lower than current pricing. It's actually a function, right, that can be implemented in trading strategies to guarantee a minimum profit. I will have a use case later on to show you how this works. But for now, we won't touch on this yet. Okay, if you change your mind for your pending order, say 168, maybe prices is not dropping to 168. You want to adjust a bit higher. You press on the pending order, you hold it there. The option will come out again. You click on the second option, modify, and then you can change the price. I'm going to set it now to 170. So if prices drop to 1700 per ounce, the GSC will trigger that pending order. So I confirm it by pressing modify. Yep, and then you see that your buy limit is changed 1 ounce at 1700. And then if you want to cancel on a pending order, also no problem. Same thing. Let's say for buy stop, I don't want the buy stop anymore. I hold on it. And then I press delete, confirm, delete, and it's gone. Okay. So now that you know the major functions of GSC Live, let's move on to our highlight for the webinar. So you can see my slides again, right? Okay, so we're going to talk about moving average today. What is moving average? Very simple. It's the average prices of a particular asset over a specified period that you set. And it's calculated by adding all the data points of that period and then dividing it accordingly. So why moving average? It's easier to understand, and it is important to identify a trend and then write the trend. So moving average actually helps in that and gives you an edge when you invest. So you can determine, you can confirm the direction of a trend. And also when a trend is reversing, right, you can also see it. So what is the common periods for moving averages? So as I mentioned, you get to specify a period for moving average, right? So normally people use 20 periods for short-term trend, 50 periods for midterm, and then 200 periods for long-term trend. There are different types of moving averages, namely simple moving average, weighted moving average, and exponential moving average. For simple moving average, right, all values are given equal weight. So whether it's past data or the most recent data, they are all divided accordingly, equally. So, but because of this, right, it's slower to react to trends, which is what we call a lag. For weighted and exponential, right? Sorry. For weighted and exponential, they are faster because they put more weight on most recent data and compared to past data. And their calculation is a bit, they are different because the way they calculate is different. But I won't go into that because for this sharing session, right, we will use EMA for reference. And then at the bottom, you can actually see the lag that I'm talking about. You can see that when prices drop, right, there's a drastic drop of 6 bars, right? You can see that the SMA didn't react to it fast enough, while the EMA and the WMA hugs the prices more closely. Okay. So what can we, how to use moving averages? Basically, we want it to trade with the trend. So why trade with the trend? Simple. You don't want to go against opposing forces. It makes your life difficult, right? So can we all agree that it's better to ride the wave and get to where you want to be more easily? So how do we spot an uptrend? You can see, okay? So if prices are above the EMA and the EMA is pointing higher, then the market is on an uptrend, as you see on the first picture on the right. On the bottom, the prices are below the moving average and the moving average is pointing lower. Then the market is in a downtrend. So the strength of a trend, right, can be gauged by the steepness of the moving average. As it gets steeper, right, that means the trend is getting stronger. Same thing, the strength can also be gauged as different periods, right? The EMA is the red color line, 50 is the blue color, and then 200 is the black color. The strength, right, can be gauged as the moving average of different periods starts to move away from each other. It gets wider and wider. So what else can we do with moving averages? Everyone wants to buy low, sell high. But how do we determine what is a low buying price? And actually moving average can help you with that. So depending on your approach to investment, are you looking to buy for long term or for the long run? For shorter term, right, they call the space between EMA 20 and EMA 50, as I highlighted on the chart, right? That's the value price. So that means prices there are considered a good buying price. And then for the longer term, they look at the space between EMA 50 and EMA 200. That means that's the value area for the longer term investors. So but you don't have to wait. You don't have to wait until you don't have to monitor the prices and keep looking at the prices. This is where you can actually use buy limits, and where buy limits and the functions of GSC Life can come into place. Okay. Moving average can also help you to identify your support and resistance levels. What is support and resistance levels? Support and resistance levels are price points which favor a pause or reversal of a trend. Okay, so as you can see on the chart, when prices fall to the EMA 20, support comes in. That means when people are selling, that means that's where buying force come in. Market recovers again, and then falls again to EMA 50. Prices support comes in again, recovers, and lastly it falls all the way to EMA 200. And once again, support comes in again, prices recover. So for the fourth one, moving average let you be aware of high risk entry points. Okay, on this first chart, what you see here, right, was when gold broke previous all-time high and rose past $2,000 USD per ounce. So what happens at this point? There's a lot of narratives. People calling out prices will break 2,500 per ounce, or even $3,000. And fear of missing out comes into play here. So when you hear a lot of stories that say gold is going to 2005, gold is going to 3,000, you don't want to lose out, right? But to be honest, right, this is a very strong emotion to overcome. And even my colleague came into it. I mean, she bought gold at over 2,050. But you have to understand that these are all emotions in play. When it comes to investment, right, I prefer to be more objective about it. And you see gold at $2,050. You see that prices have been moving further and further away from the moving average. So what do you think happens next? The prices revert back to mean. Okay, and this is also a good chance for me to demonstrate sell stop, as I mentioned just now. Let's take a look. Okay, for here, let's say at the start of July 2020, you bought gold at 1760. And then at the end of the month, you come back to check on your holdings, and prices was 1960. You make a good $200 per ounce based on your 1 ounce gold, a $200 profit. But at this point in time, you see that prices start moving sideways, and you don't know what to do. Whether prices will revert back to mean, fall all the way back, or is there more upside potential? But here's what I will do. I do a sell stop. I do a sell stop at 1915. So this is where I guarantee my earnings, $150. If prices revert back to mean, I still get a guaranteed earnings of 150. That's good, right? And then there's still upside potential. So if prices go higher, I get to earn more. So you can see how the functions of GSC Life can enhance your trading strategy. So let's move back to the next use case. This actually happened quite recently. During our National Day, there was a flash crash in prices. Prices dropped from 1,800 to 1,680 in a matter of 24 hours. So what should you do? Should you panic sell too? But you see the gap between the prices and the EMA. So what happens next? Prices revert back to mean again. Why? One of the reason, right, was that businesses like jewelers saw this as a buying opportunity. It's absolute sense for them to do so at such a low price because it lowered their costs. You know, both Chinese and Indians, we love gold. And it's a tradition for us to give gold jewelry during weddings and festivals. So you can see there will always going to be demand for gold jewelry. So that's the reason why China and India are the top 2 physical buyers for gold. And you see, right, I wrote that if prices move too far away from the moving average, they are likely to experience a price correction. So your question is, how much is too far away? To answer this question, right, I use a different indicator called Bollinger Band. And I'll be more than happy to cover that in another session if you like, or you can also approach us directly. But you see, moving average at least let you know the risk you are getting into. I mean, even if you lose money on the trade, you should know the reason why you lose money and learn from it, right? Do you trade against the trend? Do you enter the market at the risky entry point? So next time you adjust your risk tolerance and you won't repeat the same mistake again. So now I'm going to show my phone screen again to set up our EMAs together. Anyway, it's also the same for myself. During my first year in GSC, I lost 1,000 on one single trade. And my lesson learned then, right, was that stop losses are very important and not to go against a trend. Quite a painful lesson. Okay. Again, can you see my screen? You can raise your hand again if you see my screen. Okay, thank you. Okay, for MetaTrader 4, we're gonna, okay, you click on the contract. You see the second option, that's the chart. Yep, you click on that. Okay, on the top left, right, that's the period you want to view the chart in. But the M stands for minute. So M1, M5, M1, M5, M15, M30 stands for 1 minute, 5 minute, 15 minute, and respectively. H stands for hours, and D stands for day, week, W stands for week, and then MN stands for month. So for this, I like to use D, that means daily. And then on the middle part of the center top of the screen, you can see the F sign. This F, I'm clicking on it. Yeah, this one. Okay, I click on it, and you'll be brought to this screen. You click on main window, and all the indicators are available here. So today we are going to do moving average. So I'm going to select moving average for the trend part. Okay. So 20 period. For the shift, you can leave it at default. For the method, maybe your default was like simple. Then you change it to exponential. Exponential. As I mentioned, less lag. And then apply to close prices. So for the style, right? For 20 is the fastest. So I like to use red. 4 pixels. Done. Okay. Can you see your EMA 20 now? Again, we're going to repeat the same process. Click on main window. Select moving average. Change it to 50. All the other options the same. I'm going to choose blue color. Click done. That's my EMA 50. And then lastly, again, moving average. Change it to 200. Black color. Click done. And you have your EMA 20, EMA 50, and then EMA 200 on the chart. Do you guys manage to do that? You can raise your hand to show me that you managed to do that. So I can go through it again. All good? Okay. Okay, now you see the prices now. So based on what we went through today, is gold in an uptrend, downtrend, or moving sideways right now, based on moving average? Let's have a poll on that. Okay, the poll is almost ending. Most of you have already answered. Okay, most of you select the correct answer, and that is a downtrend. Yes, I would think that it's more towards a downtrend. As you can see, prices are below the moving averages. Most of the trend lines are moving down. For sideways, right? I think that around this period, it's more sideways because when, as I mentioned, when all the EMAs of different periods start squishing together, right? There's a consolidation. And then for uptrend, right? Here is a very strong uptrend to see. Yeah, you see here, there's a strong uptrend. And again at the back, yep. Then this is a very strong uptrend. Okay. So I think most of you understand the concept of what I'm trying to bring through today. But moving average, right, only tells one part of the story. It gives you a good overview. But traders actually use few more indicators to see a bigger picture. And all of this don't apply just on precious metals. It can be used on different asset classes too, like stocks, like crypto.